Dear students, today I am going to make a presentation on first unit of income tax part 1, that is introduction to income tax for BCom 5th semester. I am going to throw a light on these topics. One is deemed income, casual income, agriculture income and non-agriculture income. Dear students, in my previous session I have discussed about the meaning of assessee, assessment, assessment year, previous year, gross total income, income and its computation. In that way we have discussed about the previous topics related to the income tax. Now first of all, let me discuss about the deemed income. What is deemed income? If a person is liable to pay tax on his own income, then that person is called as a normal assessee, and the income on the tax on which income the charge is called as normal income. But if any person not only liable for his own income and he is also liable on the income of other persons, like as a guardian, as a minor, lunatic, agent or agent of non-resident, in that case on which income he is liable to pay tax, that income is called as deemed income. The examples for the deemed incomes are cash credits, unexplained investments, unexplained money, amount of investments not fully disclosed, unexplained expenditure, amount borrowed or repaid on hundi. These are the examples for deemed income. And now let us discuss about the casual income. For casual incomes we can commonly call as a non-recurring income. ಯಾವಾಗೋ ಒಂದ್ಸಲ ಬರುವಂತಹ ಇನ್ಕಮ್ ಅನ್ನು ಕಾಮನ್ ಆಗಿ ನಾವು ಕ್ಯಾಶುವಲ್ ಇನ್ಕಮ್ ಅಂತ ಕರಿತೀವಿ. Then casual income is that income which is unexpected and unforeseen. It is not received from regular source of income. It is non-recurring income. Example for that is winning from lotteries, crossword puzzles, races including horse races. And the income tax chargeable on such kind of income is at a flat rate of 30% plus surcharge plus education cess, and no income is deductible by way of expenses from such casual income. And for casual income there are some exceptions, and the following are not treated as casual income, like a capital gain chargeable under the act. Usually capital gain is not regular in nature, it's not a recurring income, it's a non-recurring income, even though it is not treated as a casual income. Then receipts arising from business or profession is also not a casual income. Receipt by way of addition to the remuneration of an employee is also not considered as a casual income. This is what about the casual income. And now let us go for the next important term, that is agriculture income. Section 2 subsection 1a defines about the agriculture income, and section 10 subsection 1 of Income Tax Act 1961 expresses about the exemption related to the agriculture income. As per section 2 subsection 1a, agriculture income includes the following. Number A is any rent or a revenue derived from agricultural land situated in India. ನಮ್ಮ ದೇಶದೊಳಗೆ ಇರುವಂತಹ ಕೃಷಿ ಭೂಮಿಯಿಂದ ಬರುವಂತಹ ಬಾಡಿಗೆ ಅಥವಾ ಆದಾಯವನ್ನು ನಾವು ಅಗ್ರಿಕಲ್ಚರ್ ಇನ್ಕಮ್ ಅಂತ ಕರೆಯಬಹುದು. And number B is income derived through agriculture. ಕೃಷಿಯಿಂದಲೇ ನಮಗೆ ಬರುವಂತಹ ಆದಾಯವನ್ನು ಇಲ್ಲಿ ಅಗ್ರಿಕಲ್ಚರ್ ಇನ್ಕಮ್ ಅಂತ ಹೇಳಬಹುದು. and one more is income from sale of agricultural products. ಕೃಷಿ ಉತ್ಪನ್ನಗಳನ್ನು ಮಾರಾಟ ಮಾಡೋದ್ರಿಂದ ಬರುವಂತಹ ಆದಾಯವನ್ನ ನಾವು ಅಗ್ರಿಕಲ್ಚರ್ ಇನ್ಕಮ್ ಅಂತ ಹೇಳ್ತೀವಿ. Anyhow, section 10 subsection 1 of IT Act 1961 states about the agricultural income is fully exempted from tax. And then it is quite essential for us to study non-agricultural incomes also. Non-agricultural incomes are those incomes which are not covered as agricultural incomes. The examples for that are income from poultry farming, income from beehive, income from sale of spontaneously grown trees, income from dairy farming, purchase of a standing crop, and dividend paid by a company out of its agricultural income. These are the few popular or the important examples for the non-agricultural incomes. Dear students, throughout this session we have discussed about deemed income, casual income, agricultural income, and non-agricultural income. And in the next session we will discuss about rate of income tax and income tax authorities. Thank you.